Trump's tariffs. A deep dive into economic independence. Are tariffs the key to unlocking economic independence, or a dangerous gamble with global trade? Let's dissect the complexities of Trump's Liberation Day tariffs and explore their potential impact on the U.S. and the world. Disclaimer. This explanation is for informational purposes only and does not express any political opinions or endorsements. The information provided is based on publicly available facts and news reports, and users are encouraged to verify details from reliable sources. Tariffs are essentially taxes imposed on goods imported from other countries. Think of them as a toll booth on the highway of international trade. Their primary function is to increase the cost of foreign products, making them less attractive to domestic consumers. This price hike aims to level the playing field for local businesses. The ultimate goal of tariffs is to make domestically produced goods more competitive in the market. By increasing the price of imports, consumers may be more inclined to buy American-made products. One of the main theoretical benefits of tariffs is the protection they offer to local industries. By making foreign goods more expensive, tariffs shield domestic companies from cheaper competition. This protection can lead to a boost in domestic production. With less competition from abroad, local manufacturers may increase their output to meet the demand. Increased domestic production can, in turn, create employment opportunities within the country. More factories humming means more jobs for American workers. However, tariffs aren't without their potential downsides. One of the most immediate effects is that they raise prices for consumers. These higher prices can potentially lead to inflation as businesses pass on the increased cost of imported goods to their customers. This can erode the purchasing power of consumers. As prices rise, consumers may find that their money doesn't go as far. This reduction in purchasing power can negatively impact overall economic activity. Furthermore, tariffs can trigger retaliatory tariffs from other countries. If the U.S. imposes tariffs on their goods, other nations may respond in kind. This tit-for-tat escalation can quickly spiral into trade wars. These conflicts can disrupt global trade and harm economies on both sides. Finally, tariffs can disrupt global supply chains. Many businesses rely on imported components and materials, and tariffs can make these inputs more expensive and harder to obtain. On April 2, 2025, former President Trump, in a move dubbed Liberation Day, announced a universal 10% tariff on all imported goods entering the United States. This was a bold and controversial step. The rationale behind this move was to push for greater economic independence for the United States. The idea was to reduce the country's reliance on foreign products and supply chains. The primary aim of the Liberation Day tariffs was to incentivize domestic manufacturing. By making imports more expensive, the hope was that companies would be encouraged to produce goods in the U.S. The immediate market reaction to the announcement of the Liberation Day tariffs was significant. The Dow Jones Industrial Average experienced a sharp decline. This decline reflected investor concerns about the potential economic fallout from the tariffs. The market hates uncertainty, and the tariffs introduced a great deal of it. Investors worried about the impact on corporate profits, consumer spending, and overall economic growth. The market's reaction was a clear signal of unease. As expected, China responded to the U.S. tariffs with retaliatory measures of their own. They imposed a 34% tariff on a wide range of U.S. goods. This tit-for-tat escalation exacerbated existing trade tensions between the two countries. The relationship, already strained, became even more fraught. The Chinese response highlighted the risk of a full-blown trade war. The potential for further escalation loomed large, threatening global economic stability. One of the most immediate economic impacts of Trump's tariffs was the expected rise in consumer prices. As businesses faced higher import costs, they were likely to pass those costs on to their customers. This cost transmission meant that consumers would pay more for a wide range of goods, from electronics to clothing to food. The impact on household budgets was potentially significant. The manufacturing sector also faced increased production costs and supply chain disruptions. Many manufacturers rely on imported components, and the tariffs made these inputs more expensive and harder to obtain. The agricultural sector was particularly vulnerable, as it faced reduced export opportunities due to retaliatory tariffs from other countries. American farmers saw their markets shrink. The Liberation Day symbolism was significant, reflecting a particular economic philosophy. It emphasized national self-reliance and a rejection of global trade agreements. This philosophy prioritized domestic production and job creation, even if it meant higher prices for consumers. It was a vision of a more self-sufficient America. The Liberation Day tariffs represented a clear rejection of the prevailing trend towards globalization and free trade. It was a bold statement of economic nationalism. The reception to Trump's tariffs was mixed. They resonated with those seeking to protect American jobs and industries. Supporters argued that the tariffs were necessary to level the playing field and bring manufacturing back to the United States. They saw it as a way to revitalize the American economy. However, the tariffs also faced strong opposition from businesses reliant on international trade and economists warning of inflation. Many argued that the tariffs would ultimately harm the American economy. International partners viewed the tariffs as a violation of trade norms and a threat to the global trading system. The move strained relationships with key allies. The long-term effects of Trump's Liberation Day tariffs are still unfolding. It's crucial to analyze various economic indicators to understand the true impact. We need to examine consumer spending patterns to see how higher prices are affecting demand. Are consumers cutting back on purchases, or are they absorbing the increased costs? It's also important to track inflation rates to see if the tariffs are contributing to a broader rise in prices. Are wages keeping pace with inflation, or are consumers falling behind? We must monitor employment figures in the manufacturing sector to see if the tariffs are indeed creating jobs. Are companies investing in new factories and hiring more workers? Finally, we need to assess the overall impact on U.S. GDP. Is the economy growing faster or slower as a result of the tariffs? Let's delve into specific case studies to understand how different industries are being affected by the tariffs. The automotive industry, for example, relies heavily on imported parts. The tariffs have increased the cost of these parts, putting pressure on automakers to raise prices or absorb the losses. This could lead to lower sales and job cuts. The electronics industry is another sector that is heavily reliant on global supply chains. The tariffs have disrupted these supply chains, making it more difficult and expensive to produce electronic devices. The agricultural sector, as mentioned earlier, has been particularly hard hit by retaliatory tariffs. American farmers have lost access to key export markets, leading to lower incomes and financial hardship. It's important to consider the global perspective when analyzing the impact of Trump's tariffs. The tariffs have not only affected the U.S. economy, but have also had ripple effects around the world. Other countries have been forced to respond to the tariffs, either by imposing their own tariffs or by seeking alternative trading partners. This has led to increased uncertainty and volatility in the global economy. The tariffs have also raised questions about the future of the global trading system. Are we moving towards a more protectionist world? Or will countries find a way to cooperate and maintain open trade? The answers to these questions will have a profound impact on the global economy for years to come. The future of international trade is at stake. Are there alternative economic strategies that could achieve the same goals as tariffs without the negative side effects? Many economists believe that there are. Investing in education and training is one way to boost domestic competitiveness. By equipping workers with the skills they need to succeed in the modern economy, we can make American businesses more productive and innovative. Another strategy is to invest in infrastructure. Upgrading our roads, bridges, and transportation systems can make it easier for businesses to move goods and services, reducing costs and improving efficiency. Finally, promoting innovation and entrepreneurship can help to create new industries and jobs. By fostering a climate that encourages risk-taking and creativity, we can drive economic growth and prosperity. Trump's Liberation Day tariffs represent a bold experiment in economic nationalism. While they may offer some short-term benefits, such as protecting domestic industries, they also carry significant risks, including higher prices, inflation, and trade wars. The long-term effects of the tariffs are still uncertain, and it's crucial to continue monitoring the situation closely. We need to analyze the data, consider the global perspective, and explore alternative economic strategies. Ultimately, the decision of whether or not to maintain the tariffs will depend on a complex calculation of costs and benefits. It's a decision that will have far-reaching consequences for the US and the world. Call to action. What do you think? Are tariffs a necessary tool for economic independence or a dangerous path to isolation? Share your thoughts in the comments below. Subscribe to our channel for more in-depth economic analysis, and don't forget to hit the notification bell so you never miss an update. Research the effects of tariffs on specific industries and share your findings with your network. Let's continue this important conversation and work towards a more informed understanding of the global economy. Thank you for watching.